What's going on, everybody? Welcome back to my YouTube channel. Hope you're doing well. And of course, I hope you're having a good week. The markets are a little bit slow, but they will pick up. Stay patient, traders. So on today's lesson, I wanted to talk about some trending tips that can help you to really focus on identifying true structure and behavior to give you an advantage over traders who are potentially looking for reversals or continuations too early on. We'll go into the discussion today and share an example on pound New Zealand dollar, and I really do hope that this will help benefit you in your trading moving forward. If you enjoyed the video, please don't forget to thumbs up, like, subscribe, turn on notifications, and without further ado, let's get into the show. So traders, we're here looking at an example on pound New Zealand dollar. We're on the 4H time frame, and we're going to start off here just to talk about a few tips. Now, I know a lot of traders really like to trade with clear trending markets, but that's not always possible. And especially when you're on, like, let's say the 4H time frame, unless you're a swing trader or a trader that holds his trades for long periods of time, it's not really convenient, to say the least, to be having to hold these trades, let's say from this point onwards, because let's say you identify the trend is moving up from this point, you see a break and retest, and now you're sitting in this trade for almost a month before price continues up. Now, I don't want to say that's a bad thing, but I personally am an intraday trader. So my focus is to make sure that I can get in and out of the markets on a daily basis to be able to identify potential opportunities within a short space of time. So what I want to discuss with you today is how to identify this. Now, there's a few things you need to think about. And the first thing you need to think about is your trending markets. When the markets are trending, you'll see sequences of higher lows and lower highs, etc., etc. But the question you want to be asking yourself is, at what point does the trend change? And one of the ways that I found from trading for over 10 years now is that as long as structure is respecting the previous higher low or lower high, you can look for continuations. So we can see here from the left that price had been pushing bullish, and this is an indication you want to be looking for buys. But what happens when price fails to break structural highs and fails to break structural lows? This is an indication that the market is now ranging. When the market's ranging, I wouldn't say it's hard to trade, but it's definitely not the easiest. And what you will find is that in order to get into a trade, you're either going to have to wait for price to break the highs or the lows. Now, this is where the misconception starts to derive from, really, because once price breaks the structural low, in the back of your mind, you start to think that the trend is going to continue bearish. And what you will find traders will do is they'll wait for price to come back to these levels, and then they'll look for their trading opportunities. The problem with this is, and again, it's not wrong to trade like this, but if you take a trade in anticipation of price retesting this level and continuing bearish without one important factor, then what you'll find is you may be on the right side of the market in terms of price potentially continuing bearish as part of the behavior when the breakout happened. But if price has not broken a previous higher low in an uptrend, then you will find that the market will start to respect those levels, as you can see here, and then the continuation of the overall trend will go bullish. So what we've got to do is we've got to isolate the previous higher low. This is the level in the market where price broke to make the new high. And then you've got to say to yourself, if the trend is shifting, what is my first identifier mark to see that the market will potentially now turn bearish? Because let's not forget, pound New Zealand dollar has been pushing bullish for a very long period of time. So when we know that, we have to make sure that we're aware that the trend is pushing bearish. What we want to be seeing is price taking out this structural higher low and then looking for that retest and continuation back to the downside. Once you have this information, then you can almost be certain that the overall uptrend has shifted and the downtrend has now been implemented or is now in play. What you don't want to do, traders, and this is the thing, is you don't want to anticipate price shifting in its direction too soon, because you'll find on many asset symbols, commodity, stocks, shares, whatever you want to call it, even crypto, there will always be a fluctuation where price will continue trending. You will see sharp pullbacks before the continuations. And this is exactly the same for us as intraday traders. We have to be aware of this. So when we see something like this, we have to say to ourselves, okay, fine. I can identify the price is broken this level. Today, let's say, what's today? 9th of February, whenever that is. Let's say that's a Wednesday. The current behavior of the market is pushing bearish. Can I sell this? Well, as an intraday trader, you certainly can, because what we're identifying is that price is broken this level. The intraday behavior, or the behavior for today, is now bearish. And you have an area in the market where you can identify a potential continuation back down to a key level. Once you have this information, you could potentially scale down to your lower time frames, look for those retests, breakout patterns, whatever it is you trade. However, once price comes back to this level, you now need to say to yourself, it's respecting the previous higher low in the uptrend. The reason why this is not a higher low, or this is not a higher low, or this is not a higher low, is because price did not break the structural high to confirm the higher low, because the higher high was not put in. So once we have this information, we can now start to look for potential trading opportunities. What we want to be doing is we want to be seeing a shift from this level to identify that price is going to continue bullish. Now, let me make this very clear. We don't care if price makes a new higher high. All we want to see is price pushing bullish. And as part of that behavior, what we need to do is isolate a level in the market where price is failing to break above. Now, I know this is price failing to break above because we have 8 hours of information here, which is in theory a whole day's worth of trading. And what we want to do is go down to our lower time frame. This is where we can connect our higher time frame analysis with our lower time frame analysis and identify that the overall behavior of the market was pushing bearish. You can see here now we've started to consolidate or move sideways, which is a depletion of this bearish move. And then all you're looking for price to do is break above this area to identify that the shift has now officially gone bullish. This area here, we classify as an area of support where price is failing to break these structures because potentially new form behavior is now shifting back into the market, which is part of the overall trend, which is now bullish, and we can start looking for buys. So once we have this information, what we're looking for here now is an opportunity to scale down. We start scaling down once we see price breaking and closing above structure. The structure that we're looking for is this level here that we've isolated from the hourly time frame. Now we can go down to an entry time frame. Let's call it the 30-minute time frame. And now we can start working with intraday behavior. So remember, this is our higher time frame, higher low level, which we get from the left here from the 4H. This is an area in the market where price is now broken above on the 1H. So there's a shift in behavior. We have now the intraday behavioral trend, which is trend line or trend, whatever you want to call it. I call it a brick wall that's been broken. And now what we're looking to do is isolate our levels again. So once we start to see price creating those higher lows, those higher highs and higher lows, what we're now looking for is for an area where the market can leave for a period of time and come back. This was the initial move. So this is the move that gives us the confidence that we know buyers are sitting here. And then once we have this information, we can look for our confluences. Some people may be looking for the break above structure. Some people may just be looking for the bullish candle close. Whatever it may be, you can now confirm that the bulls are officially involved in the market, and then you can execute your trade however which way you want to do it. Now, in terms of execution, I'm not going to talk about that today. We can save that for another video. But the point here is this. We've identified everything we've needed to identify in terms of the shift in behavior, the depletion of the bears. We have an indication of the bull stepping into the market. We have our new higher lows and higher highs being put in. We also know that the 4H time frame is pushing bullish from a trending perspective. And now we have a level in the market where we can identify the initial move that creates the high. We have price pulling back, which creates now the retest of that structure. So we can call this a double bottom pattern. We have the shift off at this level, which is a bullish candle close, a safe stop loss, and a target. Now, remember, we're not worried about price breaking these structures here because in theory, this is not a new high that's been formed in the sequence. Now, even if it's a new higher high that's been formed in the sequence, we still revert back to what we call the deep pullback level. And I'm just going to say this for the record, if you wanted to buy off at this level, this is completely fine. You're safe to do so. Even if you lose this trade, we're happy to take the L on it. This is a previous high and low with a new high. So we have a double bottom pattern here. But if we have price indicating that it's failing, this does not mean that the trend has shifted bearish, because we still respect the previous high or low. So that is a tip I want to give you today. Always remember, as long as price is respecting higher low structures and lower high structures, whether we have a small pullback or a deep pullback, you can still look for buying opportunities. But just remember, this is all derived from the 4H timeframe, identifying the overall trend and using just this one key concept that can really make a difference in your trading. You can even scale down to lower timeframes to find better entries, smaller stop losses, whatever you want to call them. But nonetheless, this is a very, very important concept you must understand when trading trends, and especially as an intraday trader. So traders, I hope you enjoyed that video. Just a very short lesson there on how to really see trends for what they are, and using some scaling down techniques to connect your higher timeframes to lower timeframes. Hope you find this useful. And if you do, make sure to like, subscribe, turn on notifications. And until next time, continue to trust the process.